Afternoon and welcome to the latest of our WRAP meetings, the Wildfire Risk Reduction Asset Protection Program Working Group that United Policyholders has been sponsoring now since the some people are still wanting not to call it a crisis, but I think at this stage most of us would call it a crisis. Started to manifest in 2016. So this is a gathering of community leaders, scientists, firefighting professionals, insurance professionals, mitigation vendors, and public officials from communities all throughout California who have linked arms to increase wildfire risk reduction at the parcel and community level throughout the state. We have gotten quite a few achievements under our belts, I'd say, as a working group. The first of which was to contribute to the adoption of the two standards, the Safer From Wildfires standard and the IBHS Wildfire Prepared Home and Wildfire Prepared Home Plus designations. That has happened while we've been doing this work together. We have seen the DOI unroll their mitigation discount regulations. We've seen insurers file new rating plans that reflect mitigation discounts. We've seen a lot of non-renewals, notwithstanding all the work we're doing. So I think, we're sensitive at United Policyholders to try to keep calm in the face of the challenges that are before us today, and to do things that are constructive. We don't spend a lot of time placing blame, and we really work to find solutions. So for those of you who are on here who have been non-renewed, or you're in the middle of a community that is really a buzz about non-renewals, I want to remind you that on our website, and somebody from our team will put the link in the chat, you can access both a slide deck from our most recent home insurance shopping help webinar that really covers the gamut of what do you do when you get a non-renewal notice, what are the different types of insurance companies that are out there, what options can I buy through the FAIR plan, what is a difference in conditions policy, how do I afford, what kind of strategies can I use to try to bring the premium to where I can afford it. We address all those topics in that slide deck and in the recording of last week's 90-minute shopping help webinar that we hosted. So the slide deck, I'd say, is kind of the cliff notes for your community. If you are fielding questions and people are asking you, what do I do? I would suggest that you disseminate the link to the slide deck. I'm not one that really believes that a lot of people are going to sit through a 90-minute recording, but you are more than welcome to. We did have a panel. We had 3 agents answering pre-submitted questions, and then we had 2 more agents answering questions that came in through the Q&A. So there's just a lot of information that you'll find on our website on shopping. But what we want to talk about today, we have 3 special guests, and I'm very grateful to all 3 of them for coming on with us. We're going to be talking nuts and bolts, as we always do, of with 2 particular insurance companies that were willing to join us today. What are their companies looking for? What kind of risk score are they looking for? What kind of mitigation steps are they looking to their customers to have taken or to take? And then we'll have the opportunity for some questions at the end. So we're going to start with Danielle Kagan, who is, hang on, I'm going to share my screen. It's going to take a second here. There we go. All right, now I've got to get to, sorry. Okay, all right. I want to welcome Danielle Kagan, Vice President of Consumer Sustainability and Reputation with CSAA. Welcome, Danielle.
Thank you, Amy, and thank you all. I was really excited to hear about this group and the work that you're doing, and looking forward to, hopefully being able to partner with the group to, move these things forward. So on the first slide, let me, if we could move it forward one, let me tell you a little bit about CSAA, because not all of you may be familiar with CSAA.
Yes, and if you can explain the CSAA AAA
Mhm.
thing, I think that's one of those things that confuses people.
Yes. So I'm with CSAA Insurance Group. We're headquartered in Walnut Creek. We provide AAA insurance. We are sold like mostly through AAA clubs. And so in our case, we're sold through AAA Northern California. And there is another club in Southern California that sells AAA insurance, but for CSAA, this is our space is generally in Northern California. We write about $6 billion worth of premium. We are in 23 states plus the District of Columbia, but California, and specifically Northern California, is a focus area for us. It's where we write most of our business. You can see here we serve 3.3 million customers. We have 2.8 million policies in place, about almost 4,000 employees, and we have are really proud to have been named one of the 50 most civic-minded companies in the U.S. For 9
Again,
recent
if you're willing for this fast, please.
So on the next slide,
I'm sorry, I don't know who that is. If somebody is in an airport, can you mute yourself? Thank you. Go ahead.
Yeah. So on the next slide, I'll jump right in and talk about wildfire and our role and what we are doing related to wildfire risk. And basically, we're continuing to write business in California. So we have been growing. I don't know if you have this slide there, but we have been growing.
Oh, I'm so sorry. I'm so sorry. Sorry about that. Sorry.
Yeah,
I got off track. Just give me 1 minute. My bad.
no worries. But basically, what the slide that you're about to see will show is that we are continuing to grow. So we have been writing new business in areas of Northern California and growing tremendously. Historically, like if you look at this, this is growth. That's the next slide. You'll see the growth in new homeowners policies in California, year-over-year growth. And so May 2023, we were doing about 2% growth year-over-year. Most recently, we're over 100% growth in new policies year-over-year. So we've been taking a lot of policies that others aren't and enabling to keep them off the FAIR plan. So that is where we are with in terms of writing business. I don't know if you can go to the next slide or even the one after that.
Oh, there you go.
Oh, there we go. Okay, so this shows the growth that we've been experiencing year-over-year in our homeowners policies in California. You can see it's pretty significant. The next slide will talk about our models and how we are using them. So currently we use Fireline, which has a 0 to 30 risk score. It is a little confusing though, because that's not the only thing that we look at when looking at policies. We look at factors like slope and historical fire territory and things like that. And so it's really confusing because we are mandated to send out our people's wildfire scores to them, and they get a low wildfire score and are confused because they are, they think that they are in a low risk, but in fact they have higher risk. So we are, there is a process to appeal, which involves contacting us, giving us additional information. It gets run through the system. However, we don't see much change under the Fireline score modeling. We are therefore, for that and a variety of other reasons, have a filing right now to do Zesty, which is, we believe, will add transparency to the process. It includes 2 different scores. So the first score, the level 1 score, is the location of the home. And so it looks at, the property in relation to the neighborhood, the community, et cetera. And one of the things that we like, because for things like Fireline, we don't necessarily know what's driving the score. The thing that we like with Zesty is that it will give up to 3 modifiers and will tell us exactly what the issues were that were flagged. So for example, for level 1, it might be slope, wildfire history, precipitation, temperature, etc. And it'll give us 3 of those, so we can share those with consumers and they can understand what is driving those things. The
You know,
second score,
I'm sorry,
yeah,
sorry to interrupt you. In fact, I don't have to interrupt you again if it messes you up. I just want to tell you that the precipitation is interesting
mhm,
because during our webinar, shopping help webinar last week, somebody said, you know, we live up close to the coast and it's so moist
oh,
here, even though
mhm,
yet we're, you know, so that I think, you know, will come as
yeah.
good to some people that
Mhm.
precipitation can be considered.
Oh, good, good. That's good to hear. The level 2 score is really about the individual home. So, what type of mitigation efforts have they done at the home level? And again, it's a score of 1 to 10, and they will give us risk modifiers. So, if there's concern about roof, vegetation, in various defensible areas, we will have that and be able to share that with consumers. So, we are looking forward to having that process approved as part of our rate filing. There will again be an appeal process that consumers can ask if they do something to their home, etc. It is updated more than the Fireline model, so we are hopeful that we will be able to both give them more detailed information about what they need to do, as well as be able to make a change to their policy if they have changed their score successfully. We haven't yet designed the appeal process, but it'll be similar to what we have right now. Um, uh, and beyond just talking about the models, we are working right now on broader initiatives to help educate our folks that are on the phones, that are taking calls, to be able to speak more about wildfire mitigation and to be more educated and be able to provide more information to consumers. So that's something that we are working on. It's not quite in place yet, but it is something that we're trying to train our folks.
Okay.
So on the next slide, I'll jump right into discounts and what we're doing for discounts. We were among the first to offer discounts for wildfire mitigation. We did it before the IBHS standards were created. They are roughly based on IBHS standards before they were official, so it's very similar. So we have a rate filing in for a new discounts, but for now, we have 2 parts in our current state. One is Fortify Your Community, which is a 5% off the full policy value for those that are in FireWise communities. And that happens automatically. We have data files. We can tell who's in a FireWise community. It just automatically appears on a customer's bill. They do not have to contact us or do anything unless they're in a FireWise community for some reason aren't getting the credit. But I've found very few examples of that. The second is Fortify Your Residence. So that is up to 15%. And it is basically 2 requirements that are absolutes, which is you need to have a non-combustible structure and you need a 0 to 5 foot clear zone around your house. After that, depending on, there's a multiple of options. Beyond that, there's different pieces that you get certain percentages for that can add up to 15%. I'll be honest with you, we have not gotten the uptake that we had hoped we would, and have found, and I'll talk a little bit more about the research that we've done, the 0 to 5 foot space is really challenging for people. It's going to require changing hearts and minds, and we're going to talk a little bit more later about how we're planning to do that and would love your partnership in that. On our pending filing, we will retain the FireWise discount. It will be automatic. However, to be in line with other insurance companies as well as the science, the discount will be on the fire part of the premium, not the whole policy, which would be like liability and other things. It's just going to be on the fire policy. For individual homes, we'll also be doing a process where discounts will be more accessible. So we won't have the mandated 2 criteria that you need to do, but have at 1%, 2%, et cetera, for various things.
Okay.
So that's in alignment with regulations. It is pending right now. And so we are looking forward to moving forward with that. And then I would say there are other things that we've been doing in this space. We have been doing a small number of non-renewals, very small compared to, I think, many of our competitors. when we do that, there are a couple things that we do. One is we do offer a differences in condition policy and have since we started doing that. So we will work with the customer, the policyholder, and if they are unable to find other insurance, we'll help place them with the FAIR plan and offer the differences in conditions. Additionally, we are currently telling our policyholders, if they are being non-renewed, that if they achieve the Wildfire Prepared Home designation, we will rescind the non-renewal, and we give them a year to do it. Beyond that, and we commit that we would take them back, that we would write a new policy, we would take them back, and we would guarantee them a minimum of 3 years of insurance coverage. So that is, we've had some customers that have gone through that process. I've even personally gone out and met with them, had those conversations of what worked for you, what didn't work for you, how did the experience feel? And as a result of that, we are making some changes to our process. And actually starting this week, coincidentally, we want to give people more time than they receive. Right now, the regulation, I think, is, I don't remember how many days. Amy probably remembers exactly how many days you have to give people notice on the
On the
non-renewals.
75
90?
days.
75. So
Yeah.
we trigger it at 90. And we're trying to give people more time. So starting with non-renewals, a very small number again. I don't want to emphasize the non-renewals because it really is a very small number, but it's significant to those who are being impacted for sure. And we don't do it lightly. We are doing outbound calls to them in advance and giving them pre-notice. And our goal is to let them know, give them some additional time, and give them a little bit more of a hands-on support so that they can ask questions and it can feel more of a dialogue than an edict. Previously, we also, I think I saw something pop up, plus or base. Previously, we required the plus certification, but we are now moving forward with non-renewals that are going out now, going to offer it for base. So base or plus.
If the person meets the Wildfire Prepared Home base level, you will give them the opportunity to get a renewal? Did I hear that right?
We will rescind the non-renewal, yes.
Okay.
And we will offer them a new policy.
Without having to do the boxed eaves, right? Which is the plus. I know there's something else.
Yes. All of the base things. I still get a little confused on all of the different ones and which are which category and which are ours.
So I kind of rushed, I might have rushed through the intro a little bit there. But just wanted to make sure we gave you and also Charles and Kelly a chance to talk, and then we will have a Q&A. But I see the questions are coming in. I'm jotting them down. We will get to them. If you see one, Danielle, it's great. Go right ahead and address it. And we have Steve Quarles in the who can answer anything about WPH.
Okay, perfect.
Thank you so much.
Yeah. So anyway, we will take people back. We will rescind the non-renewal. We'll take them back within a year. Presumably if they need to go to the FAIR plan, we would rewrite them to return to us if they were so inclined. So those are new changes that we're making right now as a result of feedback that we've received from customers. Our ultimate goal is really to help support mitigation and to drive it. I'm going to talk a little bit about it in a minute, but we're big partners with IBHS. And in fact, one of my colleagues is the president right now of the board of IBHS. So we are proud to work with them. We believe in the science and want to be giving people clear direction and information on what they can do to mitigate their homes. So on the next, I think we went back a slide. If you could go to,
no,
that's going back. Can you go forward? Yeah. That one. One more. Okay, here we go. So in the spirit of really wanting to understand how do we get customers to move forward, we've done some research, right? We've gone out, we've had conversations with customers, and I don't think any of the themes here will be a surprise probably to anybody on the call, but I can give a little bit more context to them. I will say people are more concerned about, or less concerned about wildfire risk and more concerned about what it'll do to their insurance. And that is an interesting development for me, just realizing that they don't see it as being as urgent as we do. But it is also an opportunity at the same time. So cost is by far and away the biggest obstacle that we've heard. Consumers have told us that they think it's reasonable to spend about $2,500 to $3,700 to mitigate their homes. I realize that's an average. Some can spend much, much more. Some can't spend anything at all. But that's what the average was telling us.
I'm
For
sorry,
some
Daniel,
people,
can you say that again? What was the price range people reported in your research?
2,500 to 3,700.
Wow. Okay.
So, you know, and it's just a gauge, right? It's to
Of course,
understand,
of course. No, listen,
what
we're
people's
all
expectations are.
trying to get to the
Yeah.
same place. So much
Um,
appreciated.
Yeah. So cost is big. So how do we get past that? That's going to be an obstacle that we collectively, we're going to be looking at it, but collectively, I think we all need to look at that as well. There's an issue around perceived effort. People feeling like if they had to do it themselves, it's too much work. If they have to hire a contractor, who knows the standards? Who do I contact? The effort to get bids, just all of that effort. And it's not just exactly the effort to get the designation, but then what does it involve moving forward? Will things change? I'm going to have to change my landscaping. I'm going to have to trim it back every year, and just the effort that it's going to take in order to move forward. There's also a significant amount of denial and resignation. People saying, I don't really think I live in a wildland. Like, sorry, it's going to affect my insurance, but I don't think it's really a big deal to me. The only fire we had was 2 years ago, and that's the only one. Like, people just rationalizing, and it's normal human behavior. So I think we could do a better job in educating people about wildfire risk. And then there's a certain amount of resignation that people feel like, well, whatever's going to happen is going to happen. That's why I have insurance. I don't need to, whatever's going to be, it will be. Kind of that Zen moment. And so, again, it's going to be an obstacle that we're going to need to work through. There's some confusion with people saying, I'm not sure what the regulations are. I heard this from my FireWise community. I heard this from the fire department. I'm hearing this from my insurance company. What's the most important? How do I do that? Do I have to do everything? Do I have to do part of it? So again, making sure, I think we're doing, I think collectively, we're getting better at that. I think there is some alignment around wildfire prepared home standards. And I think the more we can align around that and talking about it, the better it will be for consumers, because they will be really clear on what they need to do. And then last but not least is aesthetics. People feeling like this is going to be ugly. It's going to decrease the value of my home. I love my landscaping. I love my eaves, whatever it may be. That just the feeling, the fencing. I don't want chain link fencing, and not really understanding that it can be beautiful. So those are things that we're looking at, and we believe, based on the research, that doing one of these or two of these or three of these isn't going to be enough to move the dial meaningfully. So we've got a cross-functional team at CSAA that is having conversations. We're brainstorming, we're finding ideas and opportunities and trying to vet those and see what would make sense and help make increased adoption of wildfire mitigation. So the next slide. I apologize, my voice is getting hoarse. I've got a little bit of a cold that I'm getting over. So my apologies.
Thank you for soldiering through.
Yeah.
So far, so good.
Okay. So, I just to reinforce that, we have been looking at really innovative ways to try to reduce wildfire risk. And I'm just going to touch on these really quickly. But the purpose isn't to pat ourselves in the back. It's just to really say that we mean it when we say that we really want to work collaboratively on this. The first is, we have what we call a policyholder surplus. It's the money that policyholders pay in for their insurance that we keep and we invest. And we do responsible investing in order to grow those dollars. So if there's a catastrophe, we can pay claims. And we have invested in 2 different rounds, a total of $5 million into forest resilience bonds, which are created by Blue Forest. And they help accelerate the ability to treat forests. and Blue Forest has been a great partner in that work. So we reached out to them again when we learned all about slash piles that are in the forest. So they treat them and they end up with a slash pile. And the worst thing you can do is just leave it there because, it's decomposing. Well, it's still fuel for a wildfire. It is decomposing. It's emitting carbon into the air. So we have provided $25 million to their innovation fund, which they created. We reached out to them to identify the best uses of that excess biomass and wood waste. And they've made a couple investments so far. And we're really excited because we think it's part of the equation to help support forest management. We also partnered with, you'll hear a lot of partners here, partnered with the climate resilient, to create a climate resiliency challenge. We partnered with IDEO, which is a global design firm, and Aon, which is a global consulting firm and insurer, to do a challenge and invite people to share their technology and ideas to make communities more resilient. And some of the, we funded a total, we had other supporters that also participated, but the lead ones were us, IDEO, and Aon. Funded $1 million in grants to 17 organizations and companies. And some of them were related to wildfire, including BurnBot. Some of you may have heard of BurnBot. It's a technology that will go out and do kind of prescribed burns as it drives. So it's really interesting. I'd encourage you to check it out. We've also supported regional entities. I don't have to tell this group, wildfires don't pay attention to city and county lines. And in fact, sometimes the best mitigation that you can do is in your neighboring community to make you safer. So there have been some efforts that to do those regional entities. One is Marin County. They passed a ballot initiative to tax themselves to create the Marin Wildfire. I can't remember the name of the Joint Powers Authority,
Marin
but we
Wildfire
funded.
Authority.
Thank you. And we think they're a great model. We love the concept. So we provided funding to help them get the word out in their campaign. Additionally, right now, there's efforts in the East Bay to do a memorandum of understanding between different government entities. And we've helped fund the startup costs for that and provided a letter that they can use with city councils and others talking about why this is important and why we believe regional approaches are important. We have our own climate journey where we're working to reduce our emissions, which I'm happy to talk about with anybody. We're really proud of the work we've been doing in that space and have reduced our emissions by 50% over 2016 levels. The goal was by 2025, and we did it by 2023, and we're looking now at what our next goals will be. I've talked a lot here about industry partnerships and other partnerships that we've done. IBHS is a really important one for us. We're also part of the San Jose, University of San Jose, their Wildfire Interdisciplinary Research Center, and they do research on wildfire issues. So we're proud to be part of that. And then last but not least, I mentioned before the 0 to 5 foot and how our customers are having challenges with the 0 to 5 feet. So we came up with an idea and reached out to IBHS and also UC Berkeley to do a landscape design contest, getting their landscape design students to learn the wildfire prepared home standards and to create model blueprints that can be used at various price points. We made it a contest, and we have, you can go to the next slide. We have these available now. So I have a QR code. So those of you that have a phone nearby, I have it on this slide and the next one. If you can scan that, you'll see all of the ready to use designs that are there. And I think on two fronts. One is it helps show people that wildfire prepared homes can be beautiful. They might be different, but they can be beautiful. And it gives some ideas of what kind of plants and how to make it look beautiful. So I would love your partnership in sharing these designs within your community and helping people understand how beautiful this work can be. So the next slide. How am I doing on time? Oh, I'm probably.
If you can wrap up, that'd be great.
Okay.
We'll make sure we have, we already got some questions and I want to be fair.
Great.
Thank you.
So, these have all been, I think, already talked about a little bit. Funding, I think there's opportunities to have grants for individual homes, not just for communities, low interest loans. And I think it'd be great to have a website that could have a link as more and more counties and government entities and private entities are providing grants that people can search and understand what grants are available in their area. We need to simplify contractors, make it available for people. Education, just being consistent, and the consistency needs to be, we need to be communicating at a broad level, and then also very specific, because we're finding that every policyholder has a different home and a different question and a different issue that they raise. Standards, we need to enforce our codes, and then we have the home standards now with Wildfire Prepared Home. Like to see increased standards on community level, and then promoting success stories for those people that are apathetic or think it's not going to happen to them. Show them how wildfire can be stopped if they mitigate their homes. And then last but not least, I just want to thank all of you. Appreciate all of the work that you're doing. On the next slide, I've got my contact information there. Appreciate all the work that you're doing and would love to partner and continue to work together.
Danielle, thank you so much. There was a lot in there, and I know we have some good questions already. I love the landscape design ideas. I think, when in the areas that we've worked that have flood risk, that has been a really big impediment to mitigation, is that people thinking it's just going to look hideous if I elevate my home. And so there's been a lot of work done to just sort of illustrate how it can still look good. So I commend you for that. I think you said a lot of things that are that I think give us some hope, and really appreciate that information, and stick around for the Q&A, and thank you again. So Kelly Butler, Charles Toney are our next special guests. We're so grateful that you have been able to give us your time today. And rather than going through a slide deck, we've got this slide to introduce Kelly and Charles, and then we will have one other slide that outlines the areas we'll be discussing. So I just want to give a little bit of an intro to how I connected with Charles. Those of you who've been on the previous meetings of this working group know that while we did have Karen Collins with the American Property and Casualty Insurance Association speak to us, a lot of our speakers have just been on the ground there in communities, doing a lot of work and moving us forward. So it's really, really important that now we have a new level of dialogue opening. I wanted to, so both having the three of you here, but also so we know a little bit more about where your heads are at, so you also know where we're at, right? We actually do have, Danielle, just that online resource that you were talking about. United Policyholders got a grant from the Governor's Office of Emergency Services to create what we call the WRAP Resource Center, the Wildfire Risk Reduction and Asset Protection Initiative Resource Center. We had just enough funding to do just a portion of the counties. We just found out yesterday that we got renewed support from the Governor's Office of Emergency Services. So we're going to be able to flush out the map. We would love you to visit that site and help us identify resources that we may have missed. It sounds like, CSAA, and probably I'm going to think other insurers as well, have been investing in some community-based programs, and it's helpful for us to know that. Our organization, to maintain our independence, we do not accept financial support from insurance companies, but it's very important to us to work with you. And so to that end, when I met Charles, I had been introduced to Charles at by a colleague, Rex Frazier, who runs the Personal Insurance Federation and lobbies in Sacramento on behalf of insurance companies. He directed me to Charles. Charles and I had a great conversation. His company, like CSAA, is open for business in California. They may not be able to offer you a policy now, but they may. And then when I spent some time with Charles at a global risk and insurance summit that Insurance Commissioner Lara put together. I was pretty excited to have him join us. So Charles and Kelly, thank you so much for being with us.
Thank you, Amy. Can you hear me okay?
Yep.
Yep.
Good. I'll let Kelly speak first because as our Chief Underwriting Officer, she'll be able to answer all the questions better than I will that you had given us. But I just want to say thank you for inviting us. It is in my mind, I agree with you, a crisis that we have right now, but not one that's unsolvable. I'll give the commissioner credit. I think the CIS will bring the market back to life and bring companies back to California. But that alone doesn't help the affordability piece, and the mitigation will do that, because the more we can harden our properties against wildfire, the more we can harden our infrastructure. So, power lines don't spark fires, things like that. The less that insurance is going to cost in the long term, and the state is doing a great job, and the utilities are doing a great job at reducing the risk, and policyholders around the state are also doing a much better job of mitigating. Not everyone, but a lot of them really are, and Kelly can talk about that in just a second. But I'll turn it over to Kelly now.
Thank you, Charles.
Thanks, Amy. Thanks for having us, like Charles had mentioned. So I wanted to kind of start with some opening thoughts, just to kind of give you a little bit of background. I am the Chief Underwriting Officer at Mercury. And really what my team does is it reviews a lot of these homes that are coming in, right? We're looking at inspections, we're looking at the mitigation that homeowners are doing. So we feel like we've been very strong in evaluating wildfire exposure. But over the last several years, of course, things have gotten more intense, and we've learned a lot over the last few years about risk. So I'm just going to give you some high levels, and I'm going to jump into your questions. So we have established a dedicated wildfire underwriting team, which we feel really continues to sort of give us that human touch. I'll go into that more later, but without just purely looking at wildfire models. We've also completed a lot of research on multiple wildfire models, as a lot of the industry has. We're constantly looking for new technology to get our hands on to explore and review. We're utilizing aerial imagery. And we also get out in the field. So we visited throughout the state with local community officials. And last but not least, we are one of the first carriers that adopted wildfire discounts back in 2020. So we do feel like a lot of our actions have made us one of the premier wildfire underwriting groups in California. We're proud of that. We're proud of being able to stay open, obviously with the challenging regulations and pricing. And Charles will go into a bit more of that in detail. So let's go ahead and start with the first question. If you could just switch to the next slide, Amy. We just have the questions up here. So what risk scoring scale are we using? We are actually using Fireline as well. So it's a 0 to 30 score. We utilize it in underwriting and rating, and we do provide a copy of that score to the customer on their declaration page. So if for some reason they think that they maybe they're scored incorrectly or they want to dispute it, they're able to email us or call us, our customer service line. We've received a handful of complaints, not really a large volume at all, just to look into the classification, and our wildfire team will verify that. They'll get back to the customer in writing. And after that, we haven't received any more follow-up. So I think customers are kind of used to sort of the modeling aspect of it nowadays. So number two, what mitigation steps is your company taking, and sort of how does that work in terms of new business, renewal, et cetera? So let me start by saying we don't require certifications as a condition for a renewal or a new policy. So we don't think of it as a black and white process. There's a lot of flexibility within the process. So let me sort of walk you through how we look at risk and sort of a funnel effect. So we do look at the wildfire modeling scores. Obviously, everyone's using them. And that really provides us an insight to the parcel, to the neighborhood, so sort of a little bit of that broader territorial risk. And then we sort of lay aerial imagery on top of that. So we're able to understand the risk factors like defensible space at that property. We're able to look at the roof condition, the distance to the neighboring structure, sort of what is the pride of ownership at that home, sort of what are they doing to upkeep that home. And then we validate that a step further. We look at what types of designations do they have? Do they have community designations? Do they have, individual home designations? Are they utilizing any sort of mitigation efforts, even if they do not have a designation? And then we take into account some of what we do in terms of our own research at Mercury. So we go out into communities, we document areas that have been doing more from a mitigation standpoint. We discuss how they're doing more, sort of the steps that they're taking. And I won't go into specifics on this call, everything that we're doing in communities, but I know that a lot of communities haven't really been given a fair shake at times, right? So we would love for anyone on this call that wants to know more about it or have a deeper conversation with us to please contact us post-meeting. We'd really want to hear about communities that are maybe doing more and they're not really reflecting on the wildfire scores. And this is part of our underwriting that we feel like we take a lot of pride in. So not only are we utilizing some of the technology, but we're actually utilizing our underwriting background and trying to give scoring or a better score for people that want to do the right things. So we think all of that combined gives us a much more well-rounded decision. And I think it really just informs us in a way that risk scores can't always do. So we've advanced our underwriting in the last few years as well in terms of we've gotten really upfront in when a customer is trying to write a new policy. We have a really good way of blocking a quote prior to it actually being bound. So we're avoiding a lot of those post-bind cancellations that we had several years ago. We're trying to be as transparent with our customers and our agents as possible so that we don't end up, writing a policy and then canceling it. We have very, very, very few of those now, which we're really proud of. That's something that we strive to do. So the next question, how long are we giving current customers to make improvements in order to qualify for a renewal? So let me sort of give you the background of our renewal process. I think in a time of third-party data, it's leading the insurance discussion. There's a lot of technology out there. We really treat our customers as people. We have that dedicated team and we keep that personal touch. We actually have our team review every policy that comes up for renewal. If we think there's a wildfire exposure, let's say it gets flagged by a model, we actually have a team member view the image of the home prior to sending anything out to the customer because we don't want to just blanketly send out information to our customers. So this is where we believe that the underwriter is providing value. Once the underwriters reviewed it, we think there's some mitigation that needs to happen. We give a lot of advance notice, so anywhere from 3 to 6 months, we give them in order to make the steps that they need to do to make their home in better condition. And along with that renewal letter, we actually send a lot of educational material. So we send information on defensible space zones, proper tree spacing, home hardening, from the NFPA. So we're giving them a letter asking them to do these things, but also showing them how to do it. We provide an aerial image of their home, sort of showing them the defensible space zones. It gives them an idea of sort of where they need to work on creating more of that defensible space. And really, it's not a black and white decision. So we're looking at things, of course, we're looking at the designations. Do they have, the IBHS designation? Do they have FireWise? Do they have some of these designations? But we're also just looking at, are they taking the right steps? Are they at least trying to do something better? Are they, and if they are completing some of these mitigation steps, we actually let them know that they can qualify for a discount. So we will renew this customer a lot of times in terms of when they do come back to them. We know they're a more conscious homeowner. We know they're a better risk. We know they're aware of the wildfire risk, and that's something that sticks with them. So we feel really good about getting those customers back. And the next question, whether we're currently offering any mitigation discounts or waiting DOI approval on a revised rating plan. So we were one of the first carriers, as I mentioned earlier, in October 2020, we did provide a property and community level discount. sort of important to note that we offered the discount before we were actually required to. We felt it was something that, even if the discount was small, it was something that was the right thing to do. We wanted to recognize people for doing their part and mitigating their home. And that's at a time then and even now that we're still not rate adequate from a cat fire peril. So really important that we put a lot of stock into those mitigation efforts. We offered a property level discount previously in October 2020. So you're able to create defensible space, enclosed eaves, fire rated roof, fire resistant vents, things like that. We validated that through inspection, and we would give additional credit as they were able to get to each piece of the puzzle kind of solved. We had a community level mitigation discount fire-wise. We love seeing communities engaged together. It makes a huge difference being able to help one another and sort of have that community effort. And then in May, just this last month, actually, we were able to make an update to our discounts to add Wildfire Prepared Home, which we're really excited about. We're also continuing to have that individual mitigation discount. So if a customer maybe can do 4 of the 10 things, they're going to get a smaller discount, but it's going to keep going up as they're able to do more things at the home. So in my closing thoughts prior to kind of passing it over to Charles to wrap up, I did just want to briefly discuss, I think we've made a lot of progress in this space. We care deeply about customers, and I think we're very, very in the business to keep affordable insurance accessible. And I think that's one of our main concerns during this sort of crisis, as you mentioned, Amy. I know we have a large audience out there today. I mentioned it earlier, but please, please reach out to us if you feel like there's a community that's being more proactive and maybe they haven't gotten anyone to sort of see that, hey, this is a community that's doing more than others. There's also new developments out there. We know at times they're worried about being able to get insurance. Sometimes buildings have even stopped. So these are the types of things that we want to know about that's going on. And we just love getting our team in the field. And I think it allows us to build a more well-rounded picture of these areas when we're visiting them, and then we get these quotes in and we kind of know the area. And just I'll say again, we're not only open to writing new policies. It's obviously been evident during this crisis, but we're highly invested in educating and working with our customers to renew the existing business. So I'm going to go ahead and pass it on to Charles to talk about the crisis we're in California right now.
Thanks, Kelly. And Charles, if you can be a little bit quick, because we got, I do want to make sure we get a few minutes in for questions. Thank you.
Well, so I can just cut it real short. And just say, you know, we want the same things that everybody else on this call wants. We want to have policyholders be protected. We want the market to be available for them. We want for them to have choices. This crisis, I could give you a long explanation of how we got here, and how what the commissioner and the department is doing will get us out of it. It will take time. I wish it was faster, but maybe better to get to your questions rather than listen to me drone on about that. But just thank you very much for inviting us, and we be happy to talk now and any other time you'd like to talk.
Well, we are just so grateful to have the three of you on. There's so many connections, I think, that are already being made here. Clearly, Kelly, Paradise sounds like they need you. They need your attention. For sure, as a community that's doing everything they can. There's a lot of communities out there. So from my perspective, one of the most valuable things that we're doing through this working group is connecting people with ideas and innovative concepts and pragmatic approaches. And I think, Danielle hit on, I think early on, this need to help people get their minds around their property still being attractive. And there were a couple of things I was very happy to hear. One, that there's some flexibility that both of your companies are bringing That's been a real bone of contention for people. I think that as much as we admire the work that the IBHS team has done, the take-up rate of people being able to get that certification is really low. It's like, you know, somewhere between 250, 350, which is just not where we need to be. So some of the questions that, so clearly some flexibility is needed is what I guess I wanted to add there. Let's see. The wildfire portion of your premium. So, Danielle, you mentioned that your discount is going to shift from being calculated on the whole premium to being only on the wildfire portion. Can you explain that? Oh, you're on mute.
Yes, I will do that. Sorry, you think by now I'd have the mute button figured out. Basically, your home insurance policy covers a variety of things that can happen. One part of that is wildfire, and there are other coverages though. So, for example, if you have a water leak or liability claim or whatever it may be. And so when we first went out and did our discounts, we said we'll just take it off the full policy. But then looking at it, it really is reducing wildfire risk, not the risk necessarily of water damage in your house or liability claims. And so as a result, we are revising it to just affect that particular part.
Okay. And then I guess I would ask the same question to Kelly and Charles. Now you are currently offering some discounts. You didn't have a slide that breaks them out, but you said you are, right? Are you doing the same? There's a discount for the structure, hardened structure, and a discount for the surroundings being improved. Is that correct, Kelly, Charles?
Yeah, that's correct.
Okay.
And it's also with us, it's a discount too. We rate homeowners insurance sort of the same way auto insurance is rated. You know, auto insurance will have coverage for the car, coverage for liability for injuries to other people, liability for other property. So there are different coverages that make up your auto policy. Same thing, there's different coverages that make up your homeowner's policy. And so this will impact, the discounts will impact the homeowners, the wildfire component of the homeowners rate, you know, but it wouldn't necessarily have anything to do with the liability or the water loss premium. So, you know, it is wildfire specific.
Okay. So a lot of good questions about inspections. Will you, so last night I had the pleasure of being on a Wildfire Watch TV special that the Marin Wildfire Authority was participating in, and the Marin Fire Safe Council hosted. The Marin Wildfire Authority has certified wildfire mitigation specialists going out. Will your company, and I can start with you, Danielle, and go to Mercury after, who will you take a report from? Does it have to be a CW? Go ahead.
I have had one of the Marin inspections. I live in Marin, so I had the opportunity to go through that process personally, and it's an amazing program. We are currently accepting IBHS standards. We have talked to the Marin group about whether we can align and have one. The challenge is that they have heard from getting the inspections that they don't want it to be passed on to their insurance company. The concern is, so we're looking at like, can we do opt-in or something like that? But there's concern that by even making that a possibility, it might mean that fewer people get the inspection. So we've had some high-level conversations. We're very open to it, but there's still some details to be worked out.
Okay. Charles and Kelly, can you answer? So will you take, let's say, look, we have Chief Tyler on here with the Novato fire, you know, a pioneer, a leader in hands-on help to the homeowners. If his agency or, and I don't know, Bill, you're probably part of the Marin Wildfire Authority. Will you take an inspection report from a local fire agency that says we've inspected this property and it complies with Safer From Wildfires? Does that have weight for you, or does it have to be somebody who's employed by IBHS?
No, I mean, it has weight. I mean, obviously, they'd have to be able to show IBHS to get that wildfire prepared home discount. But I mean, if there's an inspection that shows us some other mitigation, we'll certainly look at it. It's just one of many components that we review.
Okay.
If I can add to that just a bit, we do go out and talk to fire chiefs and other officials all around the state. Kelly talked a little bit about that, and we learn a lot because we found that in general fire authorities would love to share the good work they're doing, and you know, often nobody's coming to ask them, and we are out there trying to find people who want to talk to us, and that goes into our understanding of the neighborhoods that helps us be more or less open, at part of the process Kelly talked about.
Yeah. Okay. Let's see. I think, I don't remember which of you said you will give your customers copies of aerial images. Are they date stamped? How does the person know when it was taken, and to be sure that it's actually, well, anyway, let's start with that.
Yeah, so we do work with aerial imagery companies that get quite frequent aerial images of the home. So they are anywhere from 6 to 12 months old. We have had agents dispute in the fact like, hey, this is an older image. So we just work with the customer and the agent to kind of like look at, well, what does it look like now? We might ask for a few photos. So there are times, obviously, they could have mitigated after we got the photo of the house. That's why we try to have our team review them ahead of time as well, because you know, as everyone knows, an aerial image is a really good tool, but it's not like 100% accurate all of the time, right? So, I mean, we definitely will work with our agents in those cases.
Okay. I have a lot of questions, but we're not going to get to them all. And since I invoked his name, I feel like I have to let Bill Tyler ask a question. Go ahead, Bill.
I'll just be quick, but the assessments that we do here all in Marin County are done through an app called Fireside. And my understanding is that if our wildfire mitigation specialists recognize that the home would qualify for an IBHS wildfire prepared home, that they send that information over to IBHS, and IBHS, or we send an application to IBHS directly to the homeowner. So we don't share information with insurance companies if they don't qualify. We only try to enroll them when they do qualify.
Okay. Oh, that's
Amy?
really interesting. So I'm sure
Love
everybody,
that.
like people are petrified that the insurance company is going to see the warts and not want it, right? And that's, yeah.
Amy, can you pull the comments after or the chats after and maybe send them to us? Because I see a lot of people asking, they want us to get in contact with them. Are you able to do that?
Yeah, I think we,
Okay.
I think we
And
can do
maybe if
that.
there's other questions we can answer too. I
Yeah,
know
I mean,
we're
I
short on time.
think I'd probably like to have you guys back.
Oh, yeah.
You know,
Sure.
I didn't mean to go light on the political, sort of the regulatory stuff. You know, it is a serious, you know, you heard the words rate adequate when we're rate adequate. So you understand, we all understand that part of the commissioner's sustainable insurance strategy is predicated on restoring insurers' confidence that they're going to be able to charge the rates that they feel they need to charge. And we just have a really big challenge to try to protect consumers against prices getting even more out of hand. But we recognize as a working group that that this is a nexus to complicated. So I do think that people probably have a lot of questions about the pending mitigation discounts, but it sounds pretty clear from both carriers' presentations. You are offering discounts, notwithstanding the fact that you've got these pending discount revised rating plans at the department. That's correct, right?
Correct.
Okay. Kimberly, with the Woodside Fire Marshal, I normally don't take questions, but since I took one with a raised hand, I'm going to let you go ahead.
Thank you. I appreciate that. I just wanted to have an understanding because, as Chief Tyler was saying before, we also use Fireside. But one of my questions was, I think it would be helpful, and maybe at some point, because there's been so many issues between, you know, insurance and fire departments, we are trying to link ourselves somewhat together. we have already passed a new ordinance that is a fuel mitigation ordinance that requires a zone 0, the 0 to 5 feet. We are following exactly as the zones are. We've implemented a lot in our ordinance that is required. We've just started doing inspections for compliance of our new ordinance. But I think what would be helpful for a lot of people is there a way of knowing exactly what insurances are looking for as their checklist, basically, to see if it runs in line with how we're looking at our inspection reports when we're doing our inspections. So they kind of start to run a little bit more in line with each other. That way, when we know a property is in compliance with us, that it's pretty close to us being able to say to the residents, hey, you're in compliance with us. Now you can, now you can work with your insurance company and maybe have their compliance as well, rather than one being stricter than the other. There's just this line of miscommunication between the two of us. And I feel it's important that we need to be working together to make sure that we're supporting residents, to give them the best chance to keep their insurance while meeting the requirements of the insurance and our ordinances as fire departments are coming to agreement with.
I'll try to answer that one if that's okay.
Thank you.
So first off, all of this is relatively new. Before 2017, we weren't paying all that much attention to wildfire, and we're all getting up to speed, still getting up to speed on this. We didn't pay anywhere near as much attention as we should have before. So for us anyway, and I'm sure for CSAA as well, we're looking for good science, not opinions, not all that. And the most reliable science I've seen, I mean, comes either from CAL FIRE or from IBHS. If you followed mostly what IBHS is recommending, I think you would find our company very interested in then learning more about the property. I think, I can't speak for CSA, but I would expect that'd be similar. I would expect that would be true for most companies as they get sort of comfortable with their understanding of wildfire, because I mean, that is the science, right?
Yeah. So listen, this is obviously of such important material. We have lots of questions. We could go for much longer. What I want to thank our special guests, Charles, Kelly, Danielle. I know you're not always comfortable, worrying about violating antitrust, but you've been all three very candid, I think, and we are grateful. I think people have so many more questions. I would definitely like to say we'd love to have you come back again. And I think we haven't set our date. Our July meeting is either going to be the 23rd or the 30th, but we will let folks know. We will send out an invitation. And we really appreciate a lot of the players are here, right on this call, right? The people that are advancing wildfire risk reduction in California, that are advancing insurance discounts, rewards, non-renewals, trying to restore a healthier marketplace for consumers. Our organization is proud to be helping lead this effort. We are grateful for everybody's contributions. We invite you to visit our website and our RAP Resource Center. And please, if you have a program in your community, you have matching grants, you have any kind of opportunities available in your community for residents, please let us know so we can put it in our RAP Resource Center. And with that, we will see everybody in July. And that's a wrap.
Thank you, everybody.
Thank you.